MPC, which has just ended at the central bank in Abuja, votes to raise MPR to 18.5 from 17.5% and retain all other parameters. Nigeria Deposit Insurance Corporation (NDIC) assures speedy payment of claims to depositors of closed microfinance banks and primary mortgage banks. Oil prices up after bullish Saudi comments, fallen U.S. stockpiles. This is Business Express on the network service of the NTA, and we are reaching you from Abuja, the nation's capital. I am Benny Adams, your guide. Good to have you join us at this time, and it's time we talk business. We bring you details of the just concluded monetary policy, which is the myth of our discussion today. The previous monetary policy committee decision, according to the Central Bank of Nigeria, was fueled by the Naira redesign policy and the fuel scarcity, among other economic hazards, says the Central Bank. The committee voted to raise the MPR by 100 basis points to 17.5%, retain the asymmetric corridor of plus 100 and minus 700 basis points around the MPR, retain the CCR at 32.5%, and also retain the liquidity ratio at 30%. And now to discuss today's MPC just concluded meeting, we have Yushau Aliu, an economist, and he joins me to take a look at the outcome of the just concluded monetary policy. Malam Show, you are welcome to Business Express.
Thank you and good afternoon.
Well, we just heard that the MPC, the last for this administration, has raised the MPR from 17.5% to 18.5%, which is 100%. Did you see that coming? Did you expect that? And what does that also mean side by side the rise in inflation that we are witnessing?
I don't see it coming, but since it comes, the economy has to take it. But like I said initially, the Central Bank Monetary Policy Committee has been looking into MPR to check price stability or to check inflation adversely. Importantly, I have raised several arguments that the essence of putting MPR is to check excess money in the economy and to check excess use of money in transaction. But unfortunately, the MPR is not yielding results. If you remember, since 2014, when the MPR was 11.5%, and now in 2023, it's still 18.5%, and inflation is sitting above 22%. So this policy, like I said initially, there must be an attempt to look into other supply bottleneck and other economic challenges to check inflation, not just merely looking at the exchange rate. In addition, also, we have to also look at the foreign exchange rate, at which 442 to the economy, meaning that if we are importing PMS at that rate, and then definitely inflation is going to be high, based on the fact that most of the producers and manufacturers would be willing to look into profit, and by looking into profit, they look at the cost and variable cost attached to any product in the economy.
Getting to listen to the CBN governor moments ago, he attributed the contribution of the monetary policies to reducing inflation through the hikes by 800%. Do you see that? Do you agree with those figures? And more so, you also indicated that fiscal authorities need to look at the deficit as well as inflation to kind of support what the monetary policy is doing to ensure that inflation is kept at check.
most of the deficit experience in administering the economy is as a result of inflation. There is no way you don't have deficit and you now raise revenues for appropriation purposes. Looking into that, in my own opinion, fiscal authorities have little or less to do in managing this inflation, based on the fact that the authority that is in charge of establishing price stability in the economy, the Central Bank of Nigeria. And that function cannot be taken away from the central bank, because the price stability, inflation, or other factors that affect the same inflation is related to any policy design or any policy that has been stressed by the Monetary Policy Authority.
Well, another way of checking inflation is supporting the real sector of the economy. And we understand from the figures the CBN governor ruled out, talking about the cumulative disbursement to the real sector. It was pegged at 2.56 trillion naira. Don't you think this is enough resources to get particularly the manufacturing sector, the real sector of the economy, to get to perform better, to get to have more supply than meet demands and even surpass demands? More like if we're having surplus in supply, the prices are going to drop.
Injections by the central banks to manufacturing is very important. But what is more important is checking the operations of the manufacturing industry as far as the input that is required by these manufacturing agencies. Looking at the fact that some of these manufacturers, the cost of production, if you take, for instance, most of the manufacturers that are involved in business activity in Nigeria are subject to interest rate from banks. But when the central bank is raising the MPR, it means that even the existing borrowing will have to be increased. And if that is increased, definitely producers are out to make profit. They have to adjust prices. And that is why today you find a situation where if MPR is adjusted, interest rate, existing interest rate is also adjusted, and if it is adjusted, the manufacturer has nothing to do but look into their profit margin and make an increase. And that is why subsequently we have witnessed changes in general price level as quick as we see.
Okay, with the efforts being made by the monetary authorities, having reduced inflation, as he said, by 800% this year, from the beginning of this year to this time, what do you think fiscal authorities should be doing at this time, more so that is a transition period, to ensure that both monetary and fiscal authorities have a kind of handshake that will bring in results that will get to tame or get to nib in the bud the rising inflation we experience?
In an attempt to deal with deficits, I don't subject to unnecessary borrowings. Borrowings to fund appropriations, it has reached a very high point where the entire revenue generated, according to the World Bank, 95% is going. So if you find an economy reaching that level, and at the same time inflation also hitting 22% year on year, then definitely you find a situation where households are going to be, all their income is going to be consumed, and there is going to be slow in the development process, especially on the GDP. And if that is witnessed, that is why you find even investors are not willing to invest when you have slow GDP and you are expecting investors to come. When you have high foreign exchange and most of the input that is required, especially to manage the power by these manufacturing agencies, the cost is increasing because the input, the variable cost attached to power generation is always increasing. And if it is increasing, it's going to be translating. And if it is translating, it's going to be sent back to the end users. And if it is sent to the end users, it will end up as we are seeing in the inflation rate, which has been advanced by the Bureau of Statistics consecutively nearly every month.
Well, now, having seen the challenges, what do you prefer to as the solutions to this, particularly the fiscal authorities as well as the monetary authorities? Yes, you mentioned the exchange rate, which needs to be looked into. In your suggestion, what do you think can be done to this exchange rate? at this time?
Not only exchange rate. You know, there has been windows at which the nation has been suffering for a very long period of time. Now that probably most of the exchange rate is going for the importation of PMS, AGO, aviation fuel, and the rest. So now that Dangote refinery is taking off, we are expecting to have a slow process in terms of what inflation is hitting the economy. That is one. Second, I am thinking that the monetary authorities, the fiscal authorities have to also look at the borrowing aspect of funding most of the appropriations by the state and the federal government, being the fact that it's a large economy. Not even having a large economy, we have large commitment and the deficits are always large. So the best thing to do is for the central bank to put a stop to raising the MPR in the first instance, because it has not been yielding result from what is from what you are seeing from
the
what has been transpired in the economy. So what my own submission all the time is that please suspend the raising of MPR so that we can suspend what the banks are doing in terms of existing loans to most of these industries that are operating. Most of them are small scale industry. Most of them are folding up because
what that also means is if the rights, okay, you are advocating a stay of action in the increase of MPR, because at the end of the day, if the commercial banks get to increase their interest rate and manufacturers get to produce at high cost, the bulk is transferred to the consumer, who is finding it difficult to also survive.
And when you are the implication is of raising prices against consumer whose income is fixed, is you are eroding the purchasing power. When you erode the purchasing power, consumer has to do away. He has to now make decision on what my income can afford. And if the economy resolves to that, then definitely some product will be out. If those products are out of stock of the same household, it means that they have to record losses, and if they are recording losses, they are folding off. So this is a situation where you find many industries, many manufacturers just closing down because they cannot continue to pay high interest rate from the existing loan, and at the same time also consumers don't have much income because of the consistent, when prices changes persistently, it eroding income of many general public. And also from the same statistics from the Bureau of Statistics, you can see the numbers of those who are graduating to poverty club increasing by day. About 133 million Nigerians are now part of poverty club because their income has been eroded, their purchasing power is not with them, and therefore and you cannot blame a consumer. You can only blame the fiscal and monetary authorities. And for the monetary authorities, it's a situation where they are not looking at the exchange rate and how to stabilize it, because the windows existed in advancing most of this foreign exchange. There has been allegation of malpractices going on. Some people are becoming overnight millionaires doing nothing. These are some of the things that
taking advantage of the exchange rate.
Taking advantage of the exchange rate. And at the same time also, some are taking advantage of this intervention by the central bank to go because of the facilities available to take, and then instead for them to be more productive. That is why in many occasions
they end up going on round tripping.
And that was why we always advocate that taking loans from banks is not a crime. When you look at what Dangote has done today, has taken over $17 billion, and now refinery is working. So what is wrong with our own loans that is from the public sector? If a private sector can take loan and you can see it clearly, and the entire African nation and the world will be celebrating.
Okay, let me remind you, Mr. Ali, that some of the loans we are taking, we are seeing it on the rail. We are able to take take in less than 2 hours from Kaduna to go to Abuja. Before you respond to that, the CBN, the NPC, actually suggested that the economy needs to build on the reserves. What do you have to say about that?
Yes, there is nothing wrong with that. Yes, I advocate, I am part of it, but like I said initially, like you are trying to portray the rail loans, the bandit has stopped the operations, and that is why we find it difficult. We have to take the taxes instead for the economy to take from the proceeds of the rail to settle debt. We are not taking from the taxes of the poor Nigerians and settling what is not working. So there is need, any business environment that is going to produce efficiently must be secured. And if it is not secured, losses are everywhere. Losses from the payment of ransom, people will become poorer. Government operations are suspended, government will become poorer, and that will multiply. At the end of the day, you find a situation where government is having larger deficit, and when government is having larger deficit, they have no alternative. If they cannot raise the money internally, they have to go to the financial market.
So which is to say the incoming administration has a task of building on the successes that have been gained from fighting insecurity from the previous administration.
Of course, not only.
Thank you so very much, Mr. Shehu Aliyu, for sharing your thoughts with us at this particular point in time. These are issues that we'll keep bringing to the table to trash them. Thank you for coming.
Thank you very much.
Moving on, gold trades in a tight range with U.S. debt debate. Fed clues in focus. Let's see how other commodities are trading. Following the revocation of licenses of 179 microfinance banks and 4 primary mortgage banks by the Central Bank of Nigeria, the Nigeria Deposit Insurance Corporation (NDIC) has assured depositors of the closed banks speedy payment of their insured sums. NDIC Managing Director Bello Hassan gave this assurance in a statement which followed the revocation of the licenses of the affected MFBS and FMBS by the Governor of the Central Bank, Godwin Emefiele. Hassan said as deposit insurer, the NDIC would begin the process of payment of the insured sums immediately with the verification of eligible depositors at the respective premises of the closed banks. He enjoined such depositors to get the required documents for the exercise, such as proof of account ownership, verifiable means of identification, and alternative bank accounts to facilitate their seamless verification and payment of their insured deposit. Hassan stated that the insured deposit is the first claim that the corporation pays to depositors upon revocation of bank's license by the CBN, adding that the maximum specified limits for the MFB and FMB subsectors are 200,000 and 500,000 per depositor per bank, respectively. As liquidator, the ND further disclosed that the corporation has also put machinery in motion to commence sales of assets of the defunct banks as well as recover debt owed to them in order to declare liquidation dividends on a pro rata basis to the affected depositors, with claims exceeding the maximum insured sums of 200,000 for microfinance banks and 500,000 for the PNBs. He assured that regulatory authorities are leaving no stone unturned to ensure that the soundness of the banking system is not compromised, stressing that there is no need for the public to panic over the safety of their bank deposits. And President Muhammadu Buhari has written to Senate seeking approval for the reimbursement of 16.7 billion naira to Borno State for the federal government road projects carried out by the state. The executive communication indicated that the request is sequel to approval by the Federal Executive Council on the 3rd of May 2023. National Assembly correspondent Ignatius Nko reports.
First plenary of the week, 21 days to the end of this assembly, There are still some pending issues that need consideration, and the Senate is not relenting. The day's business commenced with President of the Senate, Ahmed Lawan, reading executive communication from President Muhammadu Buhari seeking approval to reform Borno State for road projects it executed.
Was based on an appeal by the state and my directive to the Federal Ministry of Works and Housing to ensure that sufficient funds are provided for the completion of Dambua-Chibok Road based on the current cost of completion of the project. The Honorable Minister of Works and Housing would provide any additional information that may be required by National Assembly for the consideration of this request.
Senate continued with the consideration of executive request. It confirmed the nomination of Funke Opeke for appointment as member of the Universal Service Provision Board, Abike Debiri Erewa as Chairman and Chief Executive Officer of Nigerians in Diaspora Commission for a second term. It also confirmed 3 nominees for appointment as members of the Governing Board of the Niger Delta Development Commission: Bernard Okumaba, Patrick Asioweren, and Kirian Uchebu. Senate passed the Parliamentary Welfare Program Bill and the Nigerian College of Taxation and Fiscal Studies Establishment Bill.
Funding system for the welfare and well-being of the former members of the National Assembly.
Senate condemned attacks on communities in Mangu local government area of Plateau State and called on security agencies to provide protection for people of the area as moved by Senator Nora Dadut.
Minister of Humanitarian Affairs and FEMA to provide immediate relief to the IDP camps.
And of course, there should be an improvement in the security immediately to make sure that there is no infiltration by those people or their agents.
The bill seeking to prohibit secret recruitment in the Federal Civil Service passed first reading. From the National Assembly, Ignatius Nkwo.
With just a few days to the expiration of the present administration and the dawn of a new one, the Forum of former chief executives of federal government parastatals are advocating for government at all levels to continue to evolve innovative ways of raising finance to run government and increase investment volumes for national development.
Be able to identify investments that make business cases, make the country more investor friendly, enable more inflow of foreign direct investment capital, because the only alternative to borrowing is actually encouraging domestic capital to be used to be deployed in investments, as well as encouraging foreign direct investment capital inflow. And this we must streamline the processes of bringing such capital into the economy so that all the hurdles and the bottlenecks that we have had in the last 8 years of inflow of foreign capital are removed completely.
So if government embarks on social housing, that will go a long way in reducing the problem of housing for the general public. The model of funding must shift from taking bonds that would depend on ISPO or that would depend on the normal oil revenues that we get. I think we have to begin to structure what goes to the capital market as revenue bonds for infrastructure.
And now taking a quick look at the market, we just closed moments ago. The bulls further consolidated their position on the stock exchange as the market closed in a positive territory this Wednesday. All share index appreciated by 52,927.6 basis points, where market capitalization also increased by 28.819 trillion naira. 455.1 trillion were traded. Million shares were traded by investors in 6,635 deals. And next, markets were also downbeat globally, with Asia Pacific shares falling as U.S. futures lower. Let's now join Neka Oko for that update.
A deluge of bad news swept across global markets this Wednesday, driving European stocks to the biggest loss in 2 months and snuffing out this year's gain in China equities. There were reasons for investors to be pessimistic in every region, In the US, there was little progress in debt ceiling talks, and investors are increasingly worried about a default, while China's sputtering economy and worsening geopolitical ties also hurt sentiment. In Europe, Germany's DAX was down 1.49%, UK's FTSE shed 1.6%, and the French CAC declined 1.65%. In Asia, markets also slid, with the Shanghai Composite down 1.28% at 3,204.75, its lowest level since January 13. Hong Kong's Hang Seng Index posted a second straight daily loss, closing down 1.62%, while in Japan, the Nikkei 225 also posted a second straight daily loss, closing down 0.89% at 30,682.68. US stock futures fell slightly in early trading as investors kept an eye on debt ceiling negotiations. Futures linked to the Dow Jones Industrial Average fell 0.37%. S&P 500 futures also declined by 0.3%, and Nasdaq 100 was down 0.24%. African markets on their part traded in mixed territory. The JSE Africa Top 40 in South Africa led losses at 0.8% in early trade, while Morocco's Free Float Index led gains with a 0.93% increase.
Well, that wraps Business Express. For now, remember to send in your comments and observations and suggestions. Also be informed that all previous episodes are available on YouTube on NTA's channel. Business Express returns tomorrow, Thursday at 9:30 a.m.